Great. All right. Well, welcome everybody to today's session. Today, Monday, December the 9th, here at PPC. So we're going to be looking at several pairs. One of them, including gold, which the reason we're going to be looking at it, I just like the way it's looking and what's currently doing. You guys can see the market has came back and tested a certain region, okay, in the market. So we're still waiting for this whole push all the way to the upside for the 630 pips. And yes, I am still waiting for that push to the upside. But as you can see, we can go ahead and take positions down over here. Now, why is that? If you guys went ahead and joined our special guest session, okay, I'm going to go ahead and rephrase real quick. What is that we were seeing with our special guest was going on to this time frame, okay, going on to the 1 hour and trying to find that area where we mark at zero time. So we mark our 0 time over here at 12 o'clock, and we can clearly see at the market what it has done during that London session. So during that London session, market has gone to the upside really, really rapidly, all the way up over here, came down, market, and now we're currently in this region over here. So in this region over here, what I'm paying attention to, okay, I'm going to be paying attention to what's happening in this area. Okay, I'm going to be paying attention to what's happening in this area and what can potentially happen. Now, what you guys can see clearly is that we have imbalance in gold. We have this whole area of imbalance right over here. So this whole area of imbalance is acting as a magnet. Okay, the whole area of imbalance is acting as a magnet. And on top of that, we have areas in the market that are point of interest. And then we also have an institutional point over here. So I have a point of interest and an institutional point over here. Therefore, I am looking to be buying on gold specifically to the upside. Okay, I'm looking to look into this area of imbalance, and then not just that, but also looking to buy up onto my point of interest and potentially to my institutional candle up over here. So we go to lower time frames such as the M15 or even the 5-minute time frame. We can clearly see that the market had created an area of liquidity down over here, which we'll be paying attention to. Okay, so anything related with bullish movements in these regions, we'll be looking to buy into the imbalance region. Okay, this is a good buy area for us to be taking profits or to be looking into for the market to come up this imbalance region. Now, once we find the area coming into that imbalance region, we can go ahead and see what the market is going to potentially be doing inside this region, and we're going to be able to push even higher or just come down from there. But any buying positions placed in these regions are good buying positions. Now, understand that on our OBV indicator, we clearly see that the market has started to stabilize. Market has started to stay in one region. Therefore, since it has started to stay in one region, we can now expect a movement either to the upside or to the downside. But due to the fact that we do go ahead and see that the market is in an area of liquidity, okay, and we have a big area of imbalance to the upside, what's most likely going to be reacted? The market is most likely to be reacted to the upside, drawing itself into this area of imbalance when it comes to gold itself. So for gold itself, I'm looking for buying positions. I'm actually in some buying positions and holding from down over here. And what am I going to hold into? I know that my stop loss region is going to be about the same area over here. I'm going to be using the same stop loss region down over here to probably 1454, but understanding that the market can still retrace some more, okay? So understand that the market can still retrace some more, but also understand that we have an area of liquidity right here that can potentially be taken out before we move to the upside. So that's the out view on gold. I want you guys to go ahead and see GPAUD specifically and what has been happening on GPAUD. Now, we can clearly see what the market is indicating us over here on the OBV indicator is that the market is now overbought. So it's overbought, and at the same time, we do have that divergence that the market is indicating that it can now potentially push to the downside. Okay, now this is a pair that we've been following for quite a while now, And due to the fact that now we can see signs of overbought and also divergence at the same time, we can now look for identifying selling positions. As you may see here in these lower time frames located within this region where we see that the market is being overbought and also we have this divergence region, we're going to go ahead and be able to go on the lower time frame like the M15 or M5, and we can identify this right here. Now, what is it that we're identifying? What we're identifying is that the market had created these equal highs, okay? And the fact that it has created these equal highs, okay, understanding what time frame it was created, okay? So these equal highs were created within the time frame where we have that London session and New York cross. Understand that when we have these equal highs created where we have the London session, New York session cross, which is before, okay, this was about London session. Then we have this cross where it happened right over here, which was about at 5 o'clock. And we can clearly see that the market came and tested. What did the market come and test? The market came and tested this specific pair right here. Okay, this specific candle right here. And as you guys can see, we also have another confirmation. We have an order block right over here. So due to the fact that the market had created us these equal highs, this point of interest moving to the upside, which is our institutional point backed by order block, and then the movement to the downside, this tells us that the market can now potentially move to the downside. Now, not just that, but also because what? We have taken out this area of liquidity from the downside. So due to the fact that we have taken out this point of liquidity from the downside, we can now expect a retracement to the market back to our point of interest or our institutional candle backed by a order block to have that rejection to the downside. So let's go to lower time for like the M5 time frame just so you guys can go ahead and see a little bit more in depth. Now, if you guys see a little bit more in depth with this pair itself, you can clearly see that the market, okay, did that clear rejection off of this candle that did the push to the upside. Now, understanding that the market did a rejection from this candle, moving from the upside, okay? Why are we measuring this candle? Because this candle is one that took all these players out, okay? Understand we had created equal highs over here. And when we created these equal highs, we had liquidity, okay, from both sides, from the top side and from the bottom side. And this was created at a certain time frame, okay? Understanding time and place is very important. So when we get to understand time and place and where it is located, then we'll be able to understand the movements in the market, okay? So as you may see, this candle specifically was the candle that draw the market to the upside, taking stop losses carried out over here, okay? So what happened when those stop lists were taken out? What happened, okay? What happened is the fact that the banks, okay, entered in the market, okay? Banks enter in the market. And also when the banks enter in the market, they buy and they sell at the same time. So knowing that they bought and they sold on this candle specifically leads us to understand that the market would have to go ahead and retrace into that area specifically. And we may see that the market, when it went to the downside, okay, clearing this area of liquidity from the left side, okay, after it cleared our other side, what happened? Market came to the upside, tested this area, which is our candle of institution, understanding that now they have taken their positions out from the buying side, okay, they have taken their buying side profits out and started just leaving the selling. Started just leaving the selling profits in, which indicating the market moving to the downside. Now, as you guys can see, what the market has created over here as well. Okay, market has been created in area of liquidity. Okay, at the same time, we do see some type of spring right here. So what could happen? What could potentially happen is two scenarios: drop through that area of liquidity or come back into a point of interest, which this point of interest would be located right over here. We have this big move to the upside before that big push to the downside, which identifies that point of liquidity or that point of interest on lower time frame like the M5 time frame. Now we go to bigger time frame like the H1, you'll see how precise this entry would have been, which is this one right over here. For it to run us to profit about 45 pips profits instantly. By knowing how to identify our areas of liquidity, our areas where we have banks coming in at certain time frames, okay? And the time where there's going to be most liquidity in the market is going to be the New York and London cross. Why? That's when there's the most money. That's when most of the banks are doing transactions between London and New York. Therefore, there's going to be lots of volume, lots of liquidity in that time frame. Now, understand that we have divergence. Okay, I am keeping this trade to the downside as much as I can. Where to understand that we have areas of imbalance right over here in these regions. Since we have areas of imbalance in those regions, which are right over here, I can go ahead and leave the market to push down to those areas of imbalance, which we have area imbalance, this whole region right here, which one finally at 196 pips. So the area of imbalance that we have currently is right over here. Okay, that's an area of imbalance that will be acting as a magnet to the downside. So I will be paying close attention to the market going into the downside with GBP/AUD. Now that's GBP/AUD, and that's what we were able to identify on lower time frames. Now understand that on Mondays there's not much movement, so therefore tomorrow when we do New York session from the start, we'll be able to see the movement that's created, and we'll be able to investigate a little bit more in depth when it comes to these candles itself. So this is GBP/AUD, and this is what I'm looking for the market to do, for it to now potentially start pushing to the downside. Now understanding we have news events coming up, important news events coming up, okay? One of them we have, okay, today at 2:05. So what does that mean? AUD pairs, including this pair itself, I would recommend to move your entries to break even before this comes out, because this can make the market very volatile for it to move up and down. And what would I suggest you to do during this news events? What I would suggest you to do during that news event would be to look at the movement, what happens inside that news event. So let's say the market moves down, okay, between these next 4 to 5 hours, moves down to this area over here. Okay, what would I tell you to do? Go on lower time frames, M15, M5, and look for these points of interest like the one I told you right here. And during that news, the market can probably do that spike to the upside really fast, tap inside those areas, and then continue on dropping. So what does that mean? That means that could be an opportunity for you to enter. Okay, so view the movement of the news event on how it reacts. That's for today on AUD. Now understanding that we have, okay, FOMC statements, which is very, very important as well for Wednesday, which we are going to be taking that into consideration. And Wednesday, we're going to have to be very, very cautious with this pair itself, with the USD dollar. We'll be going more in depth with the US dollar perhaps tomorrow, that we're going to be able to see a little bit more movement in the market. Today, the market is still adjusting, and we need to let it adjust first before we start looking into market, before we start taking trades and so on. So remember, Mondays or Sundays, both of them are to see how the market starting off. When you want to start trading is on Tuesday, Wednesday, Thursdays. Those are the specific days that I like to trade. Now, understand that on Wednesday, we have a lot of important news. We have CPI of the US dollar at 5:30 a.m., which should move the market. Okay. Now, the next one is FOMC statements also on Wednesday at 11 a.m., which also should move the market. Now, moving forward, we have monetary policy statement for the euro, which is also very important. So this month, December, a lot of people say you can't make money because the market doesn't move a lot. In fact, it's one of the months that the market moves the most when it comes to news events. Okay, because all of these rates have to be finished before the year ends. Will the British election affect the market? Yes, the British election will affect the market, and that's something that you guys need to be taken into consideration. Okay. Now, also, moving forward, as you guys can see, manufacturing PMI. Okay, this is something that you might want. A lot of people don't look at this. Okay, but manufacturing PMI is very important to understand what the numbers come out. Anything above 50 points is good. Anything below 50 points is bad. Now, there's a range between 46 and 49 for potential growth within the bad numbers. And there's a range between the 51 to 53 of a decline between the positive numbers, as long as we have negative or positive outcomes of data when it comes to GDP, CPI, and so on. So, as you can see, we have several news events that are going to be important for the market this week, starting with AUD pairs, which is going to be today at 2:05 p.m. Pacific Standard Time. Moving on, we have this one could move the market somewhat as well. I'm not going to pay too much attention to it. But Wednesday, I'll pay a lot of attention to this, which is the CPI for the US dollar and also the FOMC meetings for the US dollar. As you can see, federal fund rates. Okay. What will the rates happen? Okay. What's gonna come out? What's gonna be the outlook for the rates? Okay. Are you gonna be negative? Are you gonna be positive? What's gonna happen in the market? Now, what you would like to see to understand, you want to go to the DXY, right? You want to go to the DXY, see what's happening in the DXY. Right off the bat, you may see there's a lot of imbalance over here. Okay, there's a lot of imbalance on the 1 hour time frame. Lots of imbalance. There's equal highs over here. So that's something that you guys might want to take into consideration right off the bat with DXY. Now, DXY, you're going to look into to see what can potentially happen with rates. So, what do I expect that can happen with rates? Rates can probably push the market up, so that way it can continue moving down. Okay? But that's something we need to see first. We still have 2 days to see what happened within this area. But the pairs that I would be mostly interested in would be the CAD pairs. Would be CAD JPY, CAD CHF, overall USD CAD. Okay, these would be the ones that I'd be more interested on. And I'd be looking for areas in which I can look to identify so market inputs to the downside. So you may see that we have a huge gap of imbalance in this region that the market's trying to fulfill. Okay, but you need to see areas where you can potentially enter. Right here at this moment, there's no areas for me to enter. So that's USD CAD. Now, GBP CAD, you may start seeing that the market's starting to move to the downside. But the question is, what happened up here? Right? What happened up there? We're going to go to lower time frames. And 15. Okay. And around what time was this created? Okay, what time was this created? You can see we have our separation between the 0 time right here. So we may see that the market had created these equal highs, and then right after that 0 time, we spiked to the upside and then came down, backed by an order block. Back from an order block from the push to downside, which would indicate is that the market would continue on pushing to downside, or it could do small retracement within this area. And as you may see, market had an instant reaction, about 70 pips. to the downside. So let's go ahead and see these real quick. Let's go ahead and go to Euro USD as well and go to that 0 time slot. So we go to that 0 time slot. What do we see? We see market also doing the same scenario. Okay, these could have been the equal highs as well as these right here on lower time frame. Okay, you may see the equal highs on lower time frames created within this region. Okay, also created over here. Now, when the market pushed to the upside, broke these equal highs, okay, there's no liquidity broken from the downside. So there's liquidity right here. Market created equal highs up here, pushed this liquidity zone to the upside. Okay, and we can see liquidity was broken from the upside right here, but came back down to the same liquidity zone. We didn't break it, therefore we did another push to the upside right over here. Okay, we keep the same liquidity zone. Now what happened on this push to the downside? Market came and surpassed this liquidity zone. Okay, market came and surpassed this liquidity zone. So when the market came and surpassed this liquidity zone, market came back up. Where to? To the last up candle before the down move. Now, this is something that our guest was telling you about being so precise. Sometimes your trade might not be executed because of the precision. Now, we know that we circle to the nearest fourth, quarter, or half. Therefore, this would have been circle to the nearest half. For us, it would have been executed. Okay. Now, if you were waiting for this perfect moment up here, okay, you might see that you probably would have had a difficulty with your broker of it not executing. But here you can see the precision that's happening inside the market when it comes to understanding time and place within the market itself. So now that we understand time and place, okay, we're able to identify these equal highs were taken out, but not liquidity. Okay, these equal highs were taken out, but look at this right here, okay? Liquidity was taken out to the downside, but never taken out from the upside. So we didn't see that test over here. So let's say if it would have done this and it would have tested, to the downside to this candle right here, then what would I do? I'd expect for market to go to the upside. But it didn't come down and test on here. It continued on going to the upside. And continue on going to the upside. And right here, we did equal highs, liquidity, market came back up, broke liquidity from the upside, but never broke from the downside. So therefore, market broke once again from the upside and then broke from the downside, which now indicates that the market will now continue on going to the downside. Before it does so, it has to go ahead and take into consideration that candle, right? And that's exactly what the market did. Came, took into consideration that candle, and then dropped. So that's on Euro USD. This is understanding time and place, okay? This is understanding time and place within the market. Now, as you may see, it's the same trading strategy, the same trading style. The only difference is understanding time and place. Okay, so let's go ahead and go to GBP. Okay, we did GBP CAD, and I believe you guys want me to go ahead and go once again with gold. Okay, so let's go with time and place on gold and see what was happening at a certain time and place. So we go to time and place to our 0 time. Let's go ahead and see what's happening. There we go. So look at this right here, okay? So what's happening? What's happening is that the market, first of all, you gotta understand that the market is clearly on an uptrend on the 5-minute time frame, pushing and pushing higher and higher. Now, not just that, but we don't really create these equal highs very nicely. You see, it just continues on going high and high until right here. Okay, we create equal highs. Perfect. We haven't really created a liquidity zone on the bottom side, as you can see. Market continue on going up over here, create equal highs, and you may see market created liquidity zone down over here. So due to that market had created liquidity zone down over here, okay, what can we expect? Market pushed rapidly to the downside, took out liquidity zone, okay. So since the market had taken out liquidity zone to the downside, we would have expected for the market to come and tap into this candle right here. We would expect it for the market to come down and test this candle right here. As you may see, the market came down and continued on going throughout that candle and moved 10 pips higher than this right here. Now, why am I taking this one in consideration? Because we broke liquidity to downside rapidly. Okay, this was a push of momentum before doing its retracement. Now, ideally, what I would have liked for the market to do this push to the upside first, then do the push to the downside. So that way, then it can retrace into that area and I can have a stable area to locate. But for me specifically, my entry would have been right here. I would have got some straight drawdown and then got into profits. So that would have been my outlook on gold itself. I don't want to say I would have entered right here because I wouldn't. And I don't want to say I would have entered right here because I wouldn't. So I'm going to tell you where I would have entered, what would have been my mistake, or so on, what wouldn't have go in scenario with my trade itself, right? I would have taken into consideration this entry, which would have taken me straight to a 10 pips drawdown, or then after that 10 pip drawdown, taking me for about 45 pip take profit or profit zone so far to downside. So this is understanding time and place. Now understand that you also will encounter the same things right here, where not all the time is going to be perfect. But understanding the full on movement to where it can be located for a greater amount of pips is something you will take into consideration. Now, what's also something that I mention all the time, rapid moves tend to not last. And you may see the market crash right after. Okay. And another thing I would like you guys to see is that the market on the OBB indicator, we're seeing market starting to go down. When obviously over here, we're seeing market going up. Okay, so that's another indication that you could have taken in consideration for the market moving to the downside. So you may see when we have time and place on GPAUD, we had the same scenario. Time and place, equal highs. Market rushed to the downside, took out this liquidity zone, and then rushed to the upside. Okay. So understanding time and place, we'll be able to have those precision entries. So we have done time and place with GPAUD, gold, and EURUSD. Now I will be making a video specifically about time and place as well into the market and into the course itself as well. Okay, Josh says, I'm from the UK and can say with pretty good clarity, conversation, government, stronger pound, over government, weaker pound. I'm not going to trade. Okay, awesome. So we'll be looking at, we'll be having an outlook for that data to come out. We'll see what can potentially happen in the market itself. Okay. Now understanding that there could be manipulation within the market before news comes out or during the moment that news comes out to wipe out certain players. So, conversion. Okay, so I will be doing full-on recap of time and place and uploading that into the market, but I want you guys to go ahead and see another scenario right here. Okay, so let's go ahead and view this real quick. So let's go to time and place. Which time and place would be at the 0 time. Okay, and what have we created at time and place? We created the market making equal highs, taking out liquidity. Okay, we can see market taking out liquidity, come to the upside real rapidly. Okay, so over here we have we have order block over here. 2, we have order block right here. Okay. 3, we have this wick taking players out. 4, we have this rapid movement to the downside. Are we taking out liquidity? Not yet, right? We still have liquidity down over here. Market comes back down rapidly and then comes back up to where? To this candle. This last up candle before the down move. Therefore, my entry specifically would have been over here. Could you have entered right here based off of this order block retest? Of course, you could have. Okay. Well, in my picture, we didn't take that liquidity out. Okay. Unless if you were just looking at this liquidity zone that was taken out, and then we see this rapid movement to the upside, and then movement down, then yes, you could have taken this one and taken this area as a potential entry, and it would have just taken you to a potential 10 pip drawdown before this 35 pip move or this 66 pip move. Okay. So taking into consideration time and place is also very good. But we'll be taking into consideration what's happening in the market and what can lead us into the market in the near future to see where it's moving towards. So we are clearly on bigger time frame like the H1 and areas of liquidity or you need to pay attention to. Now understand that we have news events coming up at 2 o'clock, and that's something that we need to go ahead and take into consideration as well before we do anything inside the market itself. So moving forward, time and place is something you must take into consideration. I'll be doing a video of it later on today, uploading it into the PPC group, Teachable, and also into the Advantage group alongside as well on YouTube itself. So with that said, hope you guys had a great session today. Not very much pairs that I'm looking to trade at this moment. More likely just having an overall watch with its pair, which is ZPAD, gold, GPNCD, and perhaps USD CAD. Let's take a look at USD JPY real quick. Okay, let's take a look at USD JPY and see what's happening at time and place, just so we can finish off with this pair itself. So here we go. Okay. So USD JPY, time and place. Let's go ahead and go to the 5-minute or even 15-minute time frame. Okay, so when you don't see it clear, what I like to do, I like to flip my charts around. Okay, so what I would like to see, I see that the market has taken out these equal highs to the upside, but we also have equal highs over here. So specifically, this pair itself, I'm not looking to trade it at all. Okay, but also know that we have potential areas where the market can reach into. Okay, market can potentially reach this order block right here, and that order block can potentially guide the market to higher levels. And why did I say higher levels? Because the charts are backwards. Okay, so that can potentially happen. You can see the market push down over here before it goes to the upside. So you guys see what I did? I switched the charts around. Why? Because I'm better at looking at selling positions than I am at buying positions. Okay. So when you don't see the market clear, you flip the market around so that way you can have a clear visual of what you are seeing and not what you think that's happening. Okay. So with that said, USDJPY not really seeing much but a retracement down over here before it starts moving to the upside. Okay. So hope everybody had a great session today. If I do see anything in the market the day today, I'll go ahead and inform you guys throughout the Discord. And with that said, hope you guys have a phenomenal rest of your day. I'll see you guys in the next one.